All right, welcome back to another episode of Forex Tech Magazine. This is your host, Lewis. Hope you guys are doing well today. Today is February the 5th, 2019. Man, already into the second month of the year. Hopefully, you have been having an opportunity to make some money. If you have not, please stay tuned with us. Hopefully, some of the tips and tidbits that we share with you today will help you to have a prosperous 2019. And let's to get that started off. Let's go ahead and get into why you came here in the first place, and that is to look at some trades. But before we get into that, let's go ahead and get into the disclaimer. Disclaimer goes a little something like this: any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Nothing that we share with you should be considered to be investment advice. If you are in need of investment advice, then our suggestion to you would be to seek out the assistance of a licensed, competent advisor. Now that we got that out of the way, let's go ahead and get on into this. Now, we don't want to get into this right here, but let's get into some of these crazy pairs. Let's look at the Great Britain pound, New Zealand dollar. Where are we at and where have we been? Oh my goodness. This thing was acting pretty erratic today. But let's look at it. Let's take a little analysis here and let's look and see what's going on and why. And if you notice right here, just kind of recap from what we spoke of yesterday. Here goes an A, B movement. Initially, when we took this position, we thought C was somewhere down here. That's why we got in over here. Price moved up, went to resistance, came back down to support, hit resistance again a couple more times, pushed back up to the next level of resistance. Thought we were going to hit our target, which is our D extension here. Price then made a U-turn. It's been on this dramatic downward trend ever since. Came extremely close, within a pip or two of hitting our stop loss, right? Before it moved back up. And then today went up very dramatic, made a really good move. And then all of a sudden began to push back down again. Why is this? Right? Why is this? Well, there's a lot of different reasons why. As far as price will make these type moves. One, it just could be an exhaustion of price. Right, well, price got tired just moving down for the last couple of days, and then decided that, hey, you know what, it needed a nice little pullback. If you look at here on the daily, price has been moving down since back in October. Then it started to move back up again in December, right? But one thing we notice here is that here goes a low, here goes a high, here goes a higher low, higher high, higher low, higher high, higher low. All right, so when we get higher highs and higher lows, what does that tell us in the market? It usually indicates that price is moving up, that there's some type of upward momentum, some type of upward trend that's going on. Let's get in here. This looks like a muddled mess I know right now at the moment, so please excuse it. Boom. Prices on the buy side. So a couple things to take away from this right here is, one, even though it doesn't look like it, price is on the buy side of things, right? So if we put our trend line in from here, peg it out, boom, here, price is on the buy side, right? Other thing is price is moving up, right? Higher highs, higher lows, right? So it's a good indication that price is going to continue to move up, right? And now if we start to get prices going to break through or break below one of these lower highs, these higher lows, then we definitely can say, well, price is moving against us, and this looks like this was probably just a retracement, and price is going to continue lower. The other thing we'll look at here on the hourly chart, and it looks like a muddled mess, but it's actually not, because as we can see, price hit a low here back in December, right, which correlates to the low that we looked at on the daily chart. And as you can see, it's been making Fibonacci patterns ever since, and it's been hitting those Fibonacci patterns ever since. Now, there's a real sense, though, that this right here could be the end of that Fibonacci sequence, and this right here could be where price begins to break low below the A, and then we see a turnaround. it's possible. There's a lot of stuff going on right now with the Great Britain pound, and because of such stuff that's going on right now, it can make it a pretty interesting pair to trade. But for now, still feel confident about the pair. If you're not in the pair right now, don't get into it until price crosses above the downward trend line and goes into the buy zone. Right, I would say stay out of it until then. This right here, like I said, the day got pretty close to getting back into our position where we originally got in at, but unfortunately, price retreated and then began to make its move back down. So we're just gonna have to see how it plays out over the next 48, 24 to 48 hours, to whether or not this price is actually gonna make a move. I think it's gonna make a move. I think it's just gonna take a little bit of time for it to make the move, but we'll see. It's pretty promising though. It came off of these lows here, and then began to push its way back up. Also, hey, you know what? You're still moving in the right direction. You see a little bit of a support resistance in here. So once again, I'm going to leave it as is. But right now, it's still a hold. Do not buy. Just sit tight and watch it and let it do what it do. Great Britain pound, Canadian dollars. Another one had a really nice price spike earlier today before getting that pullback. Basically retracing all that move that it made up and going back down. I head back down to support levels, which is then proceed to bounce back up off of it again. Right? There's another pair. We're in the hold pattern because it has not crossed over this buy zone yet. So I'll still sit back and wait and just hold it and see what happens. Right? If your account cannot sustain that, then maybe you need to take a smaller position, or you may. If you're already into that position. So if you're already in this position, how do you manage a position? When you get something like this right here, maybe you got in up here somewhere, and now your price is all the way back here. Well, depending on how large your account is, how much equity you have in your account, you may be able to sustain a larger pullback and still be okay, or you may need to look at cutting your losses and getting out and waiting to re-enter back at a better position at a lower level. You also may want to look at, you can add funds to your account to hold your position, especially if you're getting a margin call. Somebody's coming in and saying, hey, you know what, you don't have enough capital in your account to hold this position. You could definitely do that. A lot of different scenarios you could do, or you could even if you have more than one lot size in there, so that maybe you have a standard lot, but if your account allows for you to be able to cut back and to basically reduce that size down to a micro or a mini lot, you can do that as well to be able to sustain your position, but maybe not have as many dollars per pips or whatever it is that you have right now currently, but it allows you to be able to stay in the game. So a couple of different ways to look at it, a couple of different ways to try to actively manage it when you run into these situations like this right here. I hate these situations, I hate these scenarios. I much rather go ahead, get in, and be out in and out of a trade within a day or so. How about when you get stuck in these things for like a weeks at a time, for whatever reason, for whatever's happening in those currency pairs behind the scenes, it's just it sucks. But what can you do? It's part of the life of a trader, So anyway, Great Britain pound, Canadian dollar, that's a hold. Don't go in it just yet. Here's another one right here. It looked pretty good yesterday. I don't know if you remember me or not. Somebody had chimed in, and they said they had placed a buy here. They told me this was around 3 a.m. yesterday, Mark. And I said it did look good, and it did look good at the time. It still looked good at the time, right? But I did warn them, though. I said make sure it closes above this downward trend line, right? And I said, yeah, it looks good, but we gotta make sure it closes above the downward trend line, because if not, then that's just a test of the downward trend line and not an actual buying signal. But at the time, it was above the downward trend line, right? Which was good. And as long as it closed above that, that was a buy signal, right? And that will look good because you're getting good momentum, good bullish push up, and on the daily, it was already crossed above your downward trend line, so that was good. Fortunately, it did not close. It retested. It was a retest. Price pulled back, It did later that day, however, close above, which was good, which is a buy signal, right? And then price began to pull back, crazy, right? Um, and now you have price where it's kind of hanging out. We tested again a little bit, kind of hanging out, just hanging out right here, not really doing much of anything, right? So if you bought in over here, what do? Well, obviously, same thing that we just already talked about, right? You either stay inside the trade, right? Especially if you have enough equity in the trade to be able to sustain you, or you could look to push back out of the trade. Now, you got to remember, this is your D extension here, right? This is your A here. Your risk to reward ratio between the D extension and the A is like, it's not something you want to do, right? But you also have this pullback here, right? So a couple things you could do. You can either make your stop loss down here, which would be extremely conservative, which is your C, or you put your stop loss up here at this big swing, right, and make this your C, right? Um, Stop loss being here. Oops, I'm all over the place. It's 170. That's a lot. Stop loss being there. Blah, blah, blah. Woo, 143. So your risk reward ratio is not gonna. It's not really gonna be palatable in this one right here. But here's the thing, though, right? So 143 pips, but you're risking 170 pips to be able to get it. One thing you could do is put your stop loss here if you're already in trade, and move it up once the price crosses back above this trend line, or right, like I said before, depending on how leveraged you are, you could be looking to move out of the trade, right, and to reduce your exposure in this trade, right. So maybe if you're trading, like I said, a standard lot, you can reduce it down to a mini or a micro lot, or if you're trading higher than the standard lot, you can move it back it down to a standard lot. Whatever it takes to be able um, to conserve your capital and control this trade. I do believe that this trade will push up, but how soon and when, where, that's the question. We don't know just yet, right? Um, Something we got to watch. At least, like I said before, over the next 24, 48 hours. This right here might even be a 72-hour move for this particular pair, but I would watch out for it. So with that being said, it's not a buy just yet. If you already bought into it, like I said, you got some options as far as trying to hold that position until it makes this move back up. But right now, at the moment, I would just kind of just sit tight on it. I'm gonna show you something, what I'm talking about, a real world example here in a minute about holding a position and wait for it to recover. So here's another one. This right here is the Great Britain Pound, Aussie Dollar. This one right here, unfortunately, it just looks bad. It's bouncing off this support line right here. Almost hit the A, but has not quite touched it yet. Looks like for some type of move upward. It's not in the buy zone yet, so couldn't authorize you to buy it. But from where it's at now to where it needs to go, which would be here, about 435 pips, and you're risking about 74 pips to get it. So when this thing does come into the buy zone, there should be some opportunity. The question is how much opportunity will there be? Put that out there. Let's go up here. Oh my goodness, what are you doing? All right. So it could be considered to be in the buy zone at this moment. Blah, blah, blah. It's an extension. I don't know. I tell you what, I don't know. Let's see. Hmm. Part of me kind of likes this level right here, right? Part of me doesn't. All right, so technically, no, it's not in the. Let's see. Hold on, go back out here. Technically, it's not in the buy zone as of yet. Um, uh, it would be in the buy zone as far as the. That's muddled. Um, and if you notice right here, we just had the support resistance lines up. It's kind of moving, it's trending in a sideways motion, right? Um, what I was saying about the buy zone there, right now it's pulling back, even though it has been in the buy zone previously, right? Counter trend line here, buy zone, counter trend line here, buy zone. Now it's still pulling back again. It's coming down to a level of support, which is bounced off before, which is here, and now it's bouncing off here. And the question is, will it continue to push up, or will it just bounce up for a little bit and then pull back? That's going to be the big question going into the next, like I said, 24 to 48. I would say just sit back and see what happens. Sit back and see what happens. It's not a really good setup right now to get into because it's moving down to the side. Better setup would just be to let it play out. And like I said before, you're gonna it's gonna have to go through its progression. So we'll see. So Great Britain Pound, Aussie dollar, excuse me, not a buy, not a buy, not yet, not yet. Just wait. Great Britain Pound, U.S. dollar. Once again, you can look at this right here. I don't have to get into full detail on this one. As you can see, it's still pulling back. It's pulling back to where the C was at. This is your 2.36 Fibonacci retracement level, where it's pulling back to. It's already pulled back over its resistance, which was once support. Right? It may go back and retest that and try to climb back over it, but as of right now, it's pulled back through it. Definitely not a buy at this point. Just sit back and see what's going to happen. And, you know, before you get in, right? So, once again, can't say any of this stuff is a buy. I can say right now, everything is a wait and see. Now, it looks like there's going to be some type of information is going to be released here. Let's look at our handy dandy little news over here, right? And this just talks about some technical indicators. Don't really care about that. UK services PMI overview. The UK economy will release its January service PMI later in the European session at 9:30 GMT, which is expected to come in at 51 versus 51.2 booked in December. Okay, so there you go. Here's probably the reason why we're getting some of this movement here, right? PMI is going to be coming in, right? And the good thing is about this right here, it's expected to be negative, right? So that's what you want. So that means that if it's already expected to be negative and it's already at a low, that's good. So it means that the bottom could potentially be in for the pair, right? Um, so that way, if it comes in, if you get anything that's any little hint that it's going to be better than expected, any little hint that there's something positive in there, even though everybody's expecting some doom and gloom, that could propel the currency pair in an upward trajectory. So that is good, and that's something you want to be watching out for. Absolutely. All right, and so let's look at some of these other pairs. This is the euro, the dollar. Someone came in a couple of days ago, asked about getting in at 5,800. Warned them against it. Told them I didn't think it was a good idea at the moment, just because of what was happening. Didn't really see a clear buy signal in the market from this pair, and that ideally it'd probably be better to wait until you get an actual buy signal in the market before you get into the market. Hopefully, you know what I'm saying, that warning worked out for them, because if you look at the chart, it looks like it would. Um, Because right now we're at 57.47, which is ridiculous. 57.47. And if you were unlucky enough to get here and buy in, don't feel bad. One of the things, again, what we talked about before prior, was the ability to be able to go in and hold a position, right? Which is come back in, uh, reduce your trade size, add more money to the account, reduce your leverage. There's a lot of different things you can do. But before we go back and look at that 100%, let's just remember on the daily chart, right? It wasn't a clear buy signal yet. So even though we got that potential buy signal here on the hourly chart, shouldn't be in the trade anyway. That's what it was. Sorry about that. Couldn't remember just 100%, but that's exactly what it was, and that's what we had spoke about. So that right there, even though that might be an early signal to start looking at opportunities to get into it, it hasn't. And the reason why you want to wait for it to happen on the daily chart or larger time frame is just because you want to get momentum into your trade. It helps. Without that momentum in your trade, you kind of like swimming upstream. And even though you might be right about the direction, you might be right, as far as where it's going to go. It's just going to take a lot longer to get there if you don't have some push behind your trade. So let's go look at the next one: U.S. dollar, Canadian dollar. Which once again, it's just continue to move down. Looks like you got a little bit of a pullback over yesterday. Um, may be developing a little bit of one today. Wouldn't really trust it. I'm just considering how much it's already went down and how much it's continuing to go down. Although, if we can get price to break through this downward trend line, then that would signal that we could start looking for buying opportunities. So essentially, what's happening right now, we haven't found the C in this particular pair. Here goes our A, here goes our B, and we just haven't found where the C is at. C could be, thought it was here, but it's not. Obviously, it could be here, right? But it's only going to tail out over time. Price pushes through this downward trend line, then that definitely could indicate that may be our C, and then we can start looking for price targets on the hourly basis. But interesting enough though, here on the hourly, looks like it may start to form some type of a bottom here, like it tried it here, but then price broke through. Looks like it's trying it again, so it looks like it may be slowing down. Not 100% certain. Uh, Still gonna need some more time to play out before we can actually say, okay, this thing slowed down and it looks like we're in a position to start looking at some buying opportunities in this particular pair again. Okay. And last but not least, before we get out of here, so this is the one I want to show you guys. We want to kind of talk to you guys about a little bit. This is the Australian US dollar. Um, this one here's a pretty interesting pair. As you can see, I mean, it has just been dismal. The other day, let's see here. Okay, here we go. Got to feel it back in place. So what was it the other day? I think after the non-farms payroll came out for the U.S., price took off, right? It was better than expected, and also I think some information came out about the tariffs. Potential, a lot of optimism was in the market about that, right? So it came out, pushed the pair up, you know, really well, right? We were able to get out, made our money, right? It's the green lines where we got out at. Price retraced. We said, nah, it's not a good opportunity to get back in because we understood that we want to do counter trend line break, and also too, just because stuff happened in the past, we would like to see it kind of get back to one of the fibs, or at least get close to it, right? So price retraced over a couple of hours or so. We put in our downward trend line just to kind of get an idea where price may go back to. Price cross over, right, and then we proceeded to buy in, and as we proceeded to buy in, price continued to move, started to move back down again, which sucked, right? Price pushed up here, but then immediately started moving down, came back up, and just ever since it's just been going down, going down, going down, and even to this on Monday, after some economic information came out about the pair, price still moved down. So this is one of the pairs where I had to go back in and had to think about what I was going to do to actively manage the pair because it was moving down and it just kept going, kept going, kept going. Didn't seem like there was any stop in sight other than my stop loss that I had, which of course we didn't want to trigger that, but at the same time we didn't want to keep eating away the equity in the account. So one of the options was to go back in and put some additional funds inside the account, make sure have a nice cushion there as we endure this pullback. The other option that I had for myself was to go back in and reduce the size of the trade, so to reduce my leverage on the trade. So that was an option as well. And then the other thing I did was I went back in just to kind of make sure what I was looking at was what I was looking at, right? Because a lot of times you can be looking at something and you're thinking it's one way, but then you get into the trade and you say, man, was I really seeing what I was supposed to see there? And so, yeah, absolutely, we were seeing what we were supposed to see. So these fibs are absolutely where they're supposed to be at. The next thing we looked at was where our support and resistance were at in the market, right? Because we need to see where there's some U-turn points. And one thing that we noticed is that, right in here, the market U-turn, right? Price moved up, bounce down, price moved up, bounce down, price moved up, bounce down. Same thing over here, price moved up, all right, went back down, bounced back up, went down, bounced back up, went down, bounced back up, went down, bounced back up, right? So we started seeing a pattern in the price, and you take it out a little bit further than this right here too, where price moved up, bounced down, moved up, bounced down, moved up, bounced down. So this right here, we said, aha, this right here is a definite U-turn point in the market, and it lines up perfectly with our fibs. And guess what? It lined up perfectly with what our price was doing as well. All right. Because the night price hit all the way down here, right, to that resistance slash support area in the market, that U-turn area in the market we keep talking about, right? Buyers begin to come in, and then after the news hit about the RBA, they had a little bit more of a hawkish stance on their rates. Guess what? By the grace of God, price pushed up, right? Price pushed up really well. Now you're seeing a little bit of a pullback, of course. People taking profits off of this right here, off of this pushback, off this push up, rather, I'm sorry. And it's to be expected. The next move, though, this right here is to be true, will be price to begin to make its move back up again. So we'll see how it works out over the next couple of hours or so. But once again, if this move is to be true, then that means that price It's going to push back up. But this kind of goes into what I was saying earlier about, sometimes you get into these extended retractments um, in price, and then the question becomes, well, what do I do during these extended period of time? I'm looking at my charts, I'm looking at my fibs. The fibs are right. I'm in the buy zone. I'm in the buy zone not only on the smaller time frame, I'm in the buy zone in the higher time frame as well. But for whatever reason, I got price is just pulling back, and it's pulling back right perfectly right along my downward trend line. Why isn't this thing moving the way it's supposed to move, especially when I have momentum coming into the market? Sometimes you just can't do anything about what's happening in the market. You got to be able to sit back and be patient and wait. It's just part of the game, right? You can't make the market do anything. None of us, I don't think, is trading with enough money or influence that when we place a trade, and all of a sudden, especially in the currency market, that it's going to influence the currency market and push everything in the direction that we're going, right? So you got to be patient. A cool thing about trading with the ABCD pattern is that it's showing you the direction that the market is going, right? And then ideally, if you've chosen the correct C, price should be bouncing from there, moving to the overall direction. That's how it should go. But as we know, the C, choosing C, is not necessarily going to be an exact science, right? Because we thought our C was down here somewhere, right? When the reality was C, that wasn't the C. Price broke back below that and actually came all the way down here, which this right here could potentially be the C, which I like this as a potential C, right? Because you have a support and resistance line going through this. There's also on the fib line, so there's a lot of potential support to make this a good C, basically saying that price shouldn't cross back below this line again, and it should continue to make its way up to our D extension. So at any rate, these are things to just kind of be mindful of when you're in a trade. That you gotta it's helpful to be to kind of understand or have an idea of what's happening as you're progressing through it, because a lot of people would have gotten out possibly here, or here, or even here, or even here. And actually, like, man, this just sucks, and I'm ready to get out, right? And I can't fault anybody for wanting to do that. But had you done that at any point, you'd missed out on this big move going back up, and any losses that you might have sustained, in this area, as you can see, obviously recouped, coming back up here. Now, the other thing that we can do, since we, back up here, here now, so we're still not 100% back where we were at previously, where we got in at. So we haven't recouped everything that we had in this trade. One thing that we could do, as price moves back above that zone or move back into the area, we could also put in a risk-free trade, which essentially would mean that we move our stop loss from above our A, from below our A rather, to under or right above where we got in at originally. And then as price moves up towards our target, we have what we call a risk-free trade, because if price moves back below, we'll get out and we'll make a profit. So that's the other move to think about as far as when we're trading and how to manage this trade. Okay. At any rate, guys, that's it for me for tonight. We're gonna still see how this right here goes. Hopefully, this pullback doesn't last too much longer. That this thing go ahead and starts sticking and starts pushing back up again. Looks right now, excuse me, a little bit of a sell-off going on. People taking profit, getting out of this trade, but we'll see what happens as as the day goes on. Anyway, hope this was helpful to you. If you got any questions, please hit us up. If not, I will talk to you guys in about another 23, 24 hours. Take care.